Welcome to Bears in Exile. This is part 2 of the weekend overview for June 5th, and continuing our look at the Dow SPX, VIX, TNA, UUP, FXE, GLD, and SLV. So we have that penetration to watch out for, and taking consideration of a reaction to that. And on the weekly of the VIX, we see that we have a flat line on the short-term moving averages and a weak bearish bar to contend with. So, not much to be gleaned in that respect, but certainly it's not like it's riding on top of the bar, so that isn't bullish yet. And if we look at TNA, we can see that we have a inverse hammer, also known as a gravestone doji, which signals a possible reversal. All of the secondaries are very low, with the exception of the RSI, which is just bearish neutral. So now if we look at the weekly, we can see that we do have some crossover of the short-term moving averages. We do not know if they will complete prior to entering the bar, if it continues down. But if it does happen, then we know that we have a target just below 70. So that is, 70 here would be significant, and once you know it, it lines up with a previous low. So that does give further credibility to the target should we break down. And the short-term moving averages are not as beat up as, expansion-wise as some of the other indexes, so it does have that going for it. We have a beginning of a crossover in the long-term moving averages, and so they are losing their power to suck the price back into itself. So that is bearish. And unlike some of the other indexes, we are not kissing or penetrating the bottom Bollinger Band. So a move down to 75 to kiss the lower channel does make sense. And beyond that, there isn't too much to be said for TNA. If we look at the currencies, UUP, start off with them. More of the same, we have more crossover on the short-term moving averages, and the long-term moving averages are still bearish. At first glance, this definitely looks bearish, and that the dollar should continue moving down. We have broken the or penetrated the lower Bollinger Band, so that is something to be aware of. Sideways to up movement would be appropriate, although it could do, of course, a sideways slightly down. But I mean, is this a decisive break of the dollar, breakdown of the dollar? That has yet to be seen. But secondaries are pointed down. In the case of the MACD, plenty of room to move on the downside. So, and we haven't had a correlation of the dollar, going down and the markets going up. So if the markets are decoupling, then further movement down of the dollar would be bad for the market, which is a complete change, as for the longest time now, a move down in the dollar has been bullish for the market, but we shall have to see. If it hasn't decoupled, then the market should go up as it reasserts its pricing relative to the dollar. So this could be bullish, this could be bearish. We just don't know yet. And the FXE. Continuation candle for the upside. We are outside of the top Bollinger Band though. And we have pierced it or gone above it the last few sessions. So that is unusual. You can see that in the past, but typically you can't do it for too long before having a movement in the opposite direction. The short-term moving averages do look like they're extensively or excessively separated at the moment, but we do not have a downtick. The long-term moving averages are still in place and they are bullish, and the secondaries they're very high in the case of the RSI and the stochastic, but the MACD has all kinds of room to move to the upside. So once again, correlation, it used to be the strengthening of the euro would be good for the market. We have not seen that in this move, so we need to see if it goes back to that correlation or if that is broken. And GLD had a good decent move to the upside. I have not liked the separation of the angle of the short-term moving averages, although they have been just going right along on their merry way. So all kinds of room on the MACD and some room on the stochastic for further upside. This is a hammer, which would imply, at least weekly, that we could have some reversal type, and it's not a pretty hammer. It barely classifies as one, but the lower wick is longer than the rest of it. So, but overall, it is very bullish looking for the for gold, for GLD. So I have no idea where it's going. If the dollar continues to drop, then this should continue to rise. And SLV, you can see that we did have a test of the what was left of the bar. That's not even really, it's not a bar yet, it left anymore, it's a flat line. And the short-term moving averages are mixed, so not too much to say on SLV, but everything is pointing down, getting pretty low. So we need more information. There just isn't enough. And if we look at the weekly for SLV, we do have a big red bar, and it would appear that it's going down to test the bar. If it has a complete crossover prior to entering the bar, we have a target just shy of 30. So something to be aware of. On the weekly, we do have all kinds of room to move in the RSI and the MACD. When it touched the bar and it bounced off of it, that was a really good sign, but it just is not cooperating yet. So now, as SLV is and silver itself is, there's lots of talk in the blogosphere about it being manipulated at this moment. Certainly, it's entirely possible, and so essentially whoever has the most money is going to win, and remains to be seen who that is. But overall, just to sum up, we're at another turning point or testing point with the SPX and the Dow and currencies. So it is very nerve-wracking, and you would think that we'll have a decisive move soon. If this breaks down, then then it's going to break down, and I'll be wrong, and there's not going to be a bounce, and that's okay. If it does decisively decide to break right here, we'll get out and reevaluate, which is what the market is all about. And if it does bounce, then fantastic. That's wonderful. Now, do I think that it's going to bounce and just steam up out of control? No. At this point, based upon the moving averages and stuff, if we get an uptick, then it'll go back up into the bar, and then it'll decide what it'll do with itself at that point, and we'll have to evaluate it based upon that movement. The reverse head and shoulders from way back when is either going to be broken soon, and I think that'll be a big tell as to whether or not what the market is going to do with itself. So I'm anxiously watching for that, and if it does break below here and closes below here, then we know that that is no longer valid, and that'll be what it is. And if it does not and it bounces up, it'll be time to re-evaluate once it gets to the target area, and then we'll have to see from there what makes the most sense based upon the charts and the news and everything else. So there you have it. That is our market overview for June 5th. As always, this chart and video are for entertainment, educational, and consumption of time purposes only, and all trades are your own. Thank you very much.